Get ready for breaking news. Santa Clara County has filed a massive lawsuit against Meta, alleging the social media giant knowingly profits from a massive network of scam advertisements. This is huge news, as Santa Clara County's legal counsel Tony Lopresti claims these fraudulent ads bring in $7 billion for Meta, exposing users to billions in losses every single day. We dive deep into what the complaint says about Meta's internal systems and the scale of this alleged deception.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we look at the fallout from this legal action as Santa Clara County continues to sue Meta, alleging the tech giant has not only tolerated but actively monetized fraud through its algorithms. The complaint suggests Meta's algorithms deliberately target vulnerable users with more scam ads, and it claims the company allows advertisers flagged as scammers to continue running ads at premium prices. Find out how this impacts everyday users and the massive financial claims being made against Meta. We pivot now to the human cost of these digital pitfalls as we examine the ongoing trial against Meta in Santa Fe, New Mexico, with a sharp focus on teen mental health. Mental health epidemiologist Dylan Pell testified about the alarming link between social media use and severe issues like anxiety and eating disorders among middle schoolers. This second phase of the legal fight will determine if Meta should be considered a public nuisance and what massive changes might be required. And finally, we look at the market reaction as Meta Platforms' stock takes a hit, trading down 1.8% on Monday. We break down the recent analyst ratings, including those from Raymond James and UBS, and examine the massive institutional investor activity, noting how major players like Vanguard and Norges Bank have significantly increased their stakes in the company. Stay tuned right now for all the latest updates. Santa Clara County has filed a landmark civil lawsuit against Meta, alleging that the social media giant knowingly enables and profits from a massive network of scam advertisements on Facebook and Instagram. The lawsuit, filed on May 11, claims that these fraudulent ads generate $7 billion in revenue for Meta and expose users to an estimated 15 billion scam ads daily, contributing to $2.5 billion in fraudulent financial losses for users in 2024, with seniors being disproportionately affected. County legal counsel Tony Lopresti stated that Meta's platforms have become a preferred hunting ground for scammers, and that the company has implemented systems to ensure it profits from this activity. Lopresti asserted that as civil prosecutors in Silicon Valley, the county cannot allow Meta to continue a worldwide scheme to deceive consumers. The complaint details allegations that Meta's internal systems flag likely scam advertisements, but instead charge scammers a premium price to run them. The alleged scams include fraudulent financial products, cryptocurrency schemes, bogus medical treatments, ineffective supplements, and celebrity impersonations. Furthermore, the lawsuit claims Meta provides artificial intelligence tools to help scammers generate fraudulent ads and supports these schemes through a network of trusted business partners. The complaint also criticizes Meta for allegedly laying off staff dedicated to anti-scam efforts and declining to adopt universal advertiser verification measures used by competitors like Google. It further alleges that Meta views potential regulatory penalties as a mere cost of doing business, citing internal projections that fines would be smaller than revenue derived from scam ads. Meta has strongly disputed the claims. A company spokesperson, Tracy Clayton, countered that the lawsuit relies on reporting that distorts their efforts and ignores the extensive measures taken daily to combat scams. Clayton highlighted that Meta removed over 159 million scam ads last year, launched new protective tools, and partnered with global law enforcement to disrupt criminals, vowing to fight the lawsuit. The lawsuit seeks several remedies from the court, including an injunction to halt Meta's alleged unlawful conduct, restitution for lost funds, and civil penalties, especially enhanced financial penalties targeting misconduct affecting older adults and vulnerable populations. Santa Clara County characterized the action as a landmark civil prosecution, claiming it is the first of its kind brought by a local civil prosecutor in the nation. Santa Clara County has filed a lawsuit against Meta, alleging that the technology giant has profited from billions of fraudulent advertisements targeting vulnerable users. The complaint, led by County Counsel Tony Lopresti, asserts that Meta, the parent company of Facebook and Instagram, has not only tolerated but actively monetized fraud through its algorithmic targeting practices. According to the filing, Meta's algorithms are designed to identify vulnerable users, such as those who have previously clicked on suspicious links, and deliberately serve them more scam advertisements. The lawsuit further alleges that Meta allows advertisers flagged as likely scammers to continue running ads at higher prices, described as penalty bids. Attorneys estimate that Meta facilitates billions of scam ads daily, generating billions in annual revenue from high-risk advertising. Additionally, the complaint claims that Meta's generative AI tools have been exploited by bad actors to create more convincing scam content, highlighting the significant human toll of these scams, which range from fraudulent investment schemes to fake medical treatments. This legal action follows similar scrutiny, including a recent verdict where the New Mexico Attorney General's office secured $375 million in damages against a company, though Meta plans to appeal the ruling. The case underscores growing legal challenges to social media advertising practices. In response to the lawsuit, a Meta spokesperson stated that the claims are misleading and that the allegations distort the company's efforts to combat scams. The spokesperson emphasized that Meta aggressively fights scams by removing over 159 million scam ads last year, launching new protective tools, and partnering with law enforcement globally. Santa Clara County's lawsuit seeks financial restitution for consumers, civil penalties, and a court order mandating changes to Meta's advertising practices. The filing signals increased legal pressure on social media advertising, echoing earlier actions such as a similar suit filed by the Consumer Federation of America in Washington, D.C. SANTA-FE, New Mexico. The second phase of New Mexico's legal challenge against social media giant Meta intensified on Monday, centering on the significant impact of these platforms on adolescent mental health. During the trial, Dylan Pell, a mental health epidemiologist with the New Mexico Department of Health, presented data highlighting serious concerns regarding social media use among teenagers. Pell cited research spanning 2014 to 2016 indicating negative effects. He testified that in New Mexico, suicide has been either the leading or second leading cause of death for adolescents in recent years. Furthermore, Pell linked social media use to reduced sleep among middle schoolers, noting that these users were less likely to achieve the recommended 8 to 10 hours of sleep, a deficiency that is directly correlated with increased anxiety risks. The state is also actively pursuing evidence that Meta's platforms contribute to tangible, real-world harm for young users, specifically citing eating disorders. Pell presented statistics showing a concerning rise in related behaviors. In 2023, 1 in 3 middle schoolers reported engaging in fasting for weight control. Pell further stated that the risk of experiencing symptoms associated with eating disorders, such as vomiting or using laxatives for weight management, has doubled between 2011 and 2023. Meta's legal team, represented by attorney Tim Schultz, contested the direct causal link between social media use and conditions like eating disorders or depression, challenging the validity of the presented data. The New Mexico Department of Justice has designated this proceeding as the second phase of its ongoing legal battle against Meta, which was previously found liable in March for inadequate protection of children on its sites. The upcoming bench trial will be crucial, as it will determine whether Meta should be classified as a public nuisance and whether the company is required to invest billions of dollars in remediation efforts for its products. Meta Platforms, Inc., NASDAQ, Meta experienced a downturn on Monday, with its stock trading down 1.8%, falling to a low of $598.08 and closing at $598.86. During trading, approximately 15,530,417 shares were exchanged, marking a 3% decrease from the average daily volume of 16,038,838 shares, following a previous close of $609.63. Several recent analyst actions have shaped the sentiment surrounding Meta. Raymond James Financial lowered its target price from $825 to $800 while maintaining a strong buy rating. Conversely, Wall Street Zen upgraded the stock from a hold to a buy rating on May 2nd, while Erste Group Bank downgraded its rating from buy to hold on April 2nd. UBS Group cut its price target from $908 to $865, but maintained a buy rating on April 30th, and Wells Fargo and Company raised its price target to $770 and assigned an overweight rating on the same date. Overall, 4 investment analysts rate the stock as a strong buy, 34 as a buy, and 9 as a hold, resulting in an average analyst rating of moderate buy, with a consensus target price of $840.31. Financially, Meta Platforms reported strong quarterly results on April 29th, posting earnings per share of $10.44, significantly exceeding the consensus estimate of $6.67 by $3.77. Quarterly revenue reached $56.31 billion, beating estimates of $55.56 billion, and the company achieved a net margin of 32.84% and a return on equity of 36.93%. Revenue showed a robust 33.1% year-over-year increase. The company also recently announced a quarterly dividend, with a 0.525 payment made to shareholders of record on March 16th, representing a $2.10 annualized dividend yield of 0.4%. In insider trading activity, Director Robert M. Kimmett sold 580 shares on April 15th, and COO Javier Olivan sold 926 shares on May 4th. Additionally, insiders sold 167,676 shares, worth approximately $107.3 million in the last quarter, representing 13.61% of the company's total stock ownership. Institutional investor activity remains significant, with major players like Auto Owners Insurance Co., Norges Bank, Vanguard Group Inc., Corient Private Wealth LLC, and State Street Corp. all increasing their stakes in Meta during the fourth quarter. Institutional and hedge funds collectively own 79.91% of the company's stock. Meta Platforms, formerly Facebook, Inc., is a global technology leader focused on social networking and immersive computing, having rebranded to Meta in October 2021 to emphasize its expanded focus on augmented and virtual reality technologies. Its core products include Facebook, Instagram, WhatsApp, and Messenger. The company currently holds a market capitalization of $1.51 trillion, with a price-to-earnings ratio of 21.77 and a beta of 1.25.